Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPJPY. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that clearly we have an uptrend from a monthly standpoint. The market has been creating new monthly higher highs and higher lows all this time and just created yet another monthly higher high. So the trend is clearly bullish if we look at the structure here on the monthly time frame, and we could expect this huge uptrend to be fueled by institutional longing, but we will be moving to institutional longing later on into the video. For now, let's drop down on the weekly time frame and see what we have. Now, from a weekly perspective, we can notice how just now we had a clear test of previous weekly resistance from which this move to the downside was created, which is now turned support. The market tested the level and is currently rejecting it to the upside and completing this weekly impulse correction and impulse pattern to the upside. We can also notice that since we have an impulse and a correction, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg, and this shows us how we had a perfect correction to the 0.382 Fibonacci, and then immediately the market rejected it to the upside because this Fibonacci was also in confluence with the previous resistance turned support, therefore creating confluence of support. Because when you have two or more layers of support in the same area of price, that creates confluence of support. So since we have confluence of support, this increases the probabilities of a potential rejection to the upside because you're supposed to see institutional longing inside of this area, which is in fact exactly what we will see that now has been going on from an institutional standpoint on this currency. For now, let's drop down on the daily time frame and see what we have. Now, here on the daily, the situation is quite clear. We just had a very strong impulse to the upside. And also here, in the creation of this impulse, the market has broken another quite important structure level, which is this zone that was acting as previous resistance from which all these previous rejections to the downside were created. And now that the market broke above the zone, all this previous resistance is now turned support. So if the market will now go and retest this previous resistance turned support, this is where we have very good probabilities of getting more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level, because also from a confluence of support standpoint, we have yet another confluence area here, because as we have this impulse, also here, if we want to measure the correction, we have to take our Fibonacci from the low to the high, and we can notice how we have the 0.32 50% and 0.618 Fibonacci retracements all lining up exactly in this area. For now, let's keep that in mind and move to the commitment of traders, so what hedge funds and the big players in the market are doing. Now, if we check the data for the GBP, what we can see is that with the last reports, net positions have been massively increased. We went from having minus 28.9k net positions all the way up to having plus 47.6k net positions, showing how a huge amount of institutions are moving back to the bullish side for the GBP. Going from a negative to a positive net positioning means that institutions went from having more shorts than longs with 72.6k shorts and only 43k longs, all the way up to now having the complete opposite. So a positive net positioning with 47.6k net positions and 105.9k longs compared to only 58.2k shorts. So clearly institutions have been moving aggressively to the bullish side for the GBP. If we move to the JPY, we can see how it has been getting very negative. So institutions have been shorting the JPY aggressively, going from minus 55k all the way down to minus 147.7k net position. So institutions essentially are moving to the bullish side of the GBP and to the bearish side of the JPY. So it is no surprise that GBPJPY, as we have seen from a monthly standpoint, has been trending to the upside aggressively, fueled by all the longing of the GBP and shorting of the JPY by part of the institutions. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. So from a daily standpoint, if the market will correct to this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.